Vodafone Idea is the one we've tried to kind of highlight today. The government's decided to convert debt of around 36,000 crore into equity, post which now Vodafone Idea's shareholding is, the government shareholding in Vodafone Idea, beg your pardon, is now nearly 50%. Stock is up 19%. Soumeet's here joining us with a deep dive on whether this aid is enough. Soumeet.
Well, yes, Vodafone Idea is definitely up today. It's up around 25%, in fact, at one point of time. Now, firstly, if you look at the bull point for Vodafone Idea coming in, is the fact that there has been continuous government support for the sector and for the company, which also means that tariff hike going forward could be relatively easy for the players. But on the flip side, there have been multiple such supports and multiple such tariff hikes. Despite that, there have been no meaningful improvement in Vodafone Idea's financial. In fact, there have been 3 tariff hikes from 2019 till now and 2 debt conversion that the government has done. Despite this, the company is continuously reporting losses. In fact, if you look at the last 13 quarters, the company has reported losses of nearly 95,000 crore rupees. Now, secondly, if you look at on the bull side, this debt conversion implies that the company has to not pay any spectrum dues for at least the next 2 years, that is till FY27. So not much, this improves the cash flow situation of the company. But on the flip side, this conversion does not include the AGR dues, which is close to 16,500 crore rupees per annum basis, and this will start from FY26. Now, this amount of 16,500 crore rupees is much higher compared to the annual cash EBITDA, which stands at around 10 to 11,000 crore rupees for the company, which also means that Vodafone Idea is still not out of the woods, and there could be some more requirement of such kind of conversion going forward. Now, this conversion of equity, now this lowers the company's overall debt seen by a scenario by around 18%, given the fact that around 36,950 crore of this debt is been converted into equity. But because of this, there is a huge dilution for the existing minority shareholders, and also the promoter holding drops to 25.5%, which also indicates that the skin in the game for the promoter is now lowering, and it now stands at just 25.5%, while the government, which is just a shareholder in the company, is holding around 49% stake in the company. Now, because of this conversion, because of this debt conversion, there's a high possibility that the company might be able to do the bank debt raise that it was looking to do for the last 1 year. It aims to raise close to 25,000 crore rupees of debt, which will aid the company's capital expenditure plans of 55,000 crore rupees till FY27. So that is the much needed relief coming in for the company, because because in past the company has not been able to do much of capital expenditure as against its peer, which could now change going forward. However, despite this, the company has seen or has been seeing continuous subscriber losses. Now, if I give you some numbers here for the customer losses that the company has seen from 2018 till now, they have lost nearly 22 crore of subscribers. That is nearly 56% of the customer base that they had back in FY18, while the market share has come down by nearly 24 percentage points. So that's a huge loss that the company has been seeing, and how the company tries to arrest this will be something important to track going forward.
In fact, Soumeet, that was going to be my question to you. What does Vodafone do to maintain or improve market share?
Well, capital expenditure is something that they need to do, because if you remember, they are, they are the last to start the 5G service in the country, while Airtel and Jio started this service at least 18 months back. And this was also one of the reasons why the company has been losing subscribers and market share, because I guess our telecom analyst on the show today was mentioning when a 2G subscriber of Vodafone Idea wants to upgrade, they look at Airtel and Jio and not at Vodafone Idea. And that is largely because the company has not done their capital expenditure. Their 4G network is not that good. In fact, 5G is recently started, and that was one of the major reasons why the company has been continuously seeing subscriber losses.
And Soumeet, sorry, if I can chime in here. Soumeet, so what does this mean from a debt perspective? On the one hand, you're saying that this 36,000 crore converted to equity is positive, and on the other, we're saying that there is another 50,000 crore of debt in the pipeline which is required. Does this only create a larger drag? Does this only accentuate the pain?
Well, it does. In fact, this is just a short-term relief that the company has been getting. Now, if you remember when the company had done a rights issue of around 25,000 crore rupees 3 years back, that time also they had clearly mentioned that there won't be any fund requirement going forward and things will improve going forward. But that did not happen. Post that, there was another fundraise of 20,000 crore rupees. Then there was a conversion of debt into equity, of government debt into equity. Despite all these situations, that all this fundraise and conversion of debt and tariff hikes that we have seen for Vodafone Idea, the financial situation has still not improved for the company, and one of the major reason here has been customer losses. If you look at the last 13 quarters, they have reported losses of nearly 95,000 crore rupees, despite all these positive announcements that we have seen so far during the years. So it is just a short-term relief, and things actually need to change within the company for any major financial benefit to come in for Vodafone Idea going forward. And one of the biggest thing that needs to change for Vodafone Idea is to stop the customer losses that they have been continuously seeing.